This is James with WSTrades.com. I want to bring you an update here, but before I get to this update, I want to say if you are looking for a trading account and you are new to the stock market, Moomoo does have a pretty good promotion going on right now. So if you go to the link in the comments and description section of this video, sign up for Moomoo and make a deposit. They do have this promotion going on where you can receive up to 15 free stocks plus one extra share of Tesla or Google. So if that's something that you're interested in, head to that link, check it out, head over to Moomoo and sign up and, get some free stock. Hey everyone, this is James with WSTrades.com. I want to provide an update here on ticker CHPT or Chargepoint Holdings. So up 2.4% on the day. Futures were down huge earlier, and now things have just completely reversed. We've got NASDAQ up over 1%. We've got S&P futures up 1%, and Dow Jones futures up about 1%. So big swing here, big reversal. And ChargePoint was down pretty big here on the weekly, and then you can see a little bit of a wick sticking out there on the tail end now. It looks like they hit a low of 405 here on the weekly time frame, and you can see on the weekly here that they're just in free fall. And if you look at their earnings, if we go back this last quarter here, analysts were only expecting a loss of 20 cents a share, and they came in at 35 cents. So they came in with a big EPS miss. And if you look year over year, not a good trend here, as they lost 28 cents in that same quarter a year ago. So much larger loss here. They should be shrinking these losses, not growing these losses. Let's take a look. And I have talked about ChargePoint before. It's been a while. I think the last video I made was maybe a couple months ago. I was talking about how I shorted them at like $7, and that ended up being a great entry, as they have just bled since then. But let's come in here real quick and take a look at their financials. Let's come into the statistics tab here in Yahoo Finance. You can see that their profit margin is ugly, negative 65%. Last 12 months for operating margin, negative 65%. Return on assets, negative 21%. Last 12 months. Return on equity, last 12 months, 110%. Revenue sitting at $558 million. We've got EBITDA at negative $338.25 million. The last 12 months, they have lost 98 cents a share. Most recent quarter, total cash showing $233 million. So their current ratio is pretty good, over 2. So, they're not going to face any type of short-term liquidity issues. Their book value is pretty low, though, at 76 a share, but they do have positive common stock value. The operations cash flow here is pretty ugly the last 12 months at negative $323 million. And then this is pretty rough too. Levered free cash flow the last 12 months in the negative at negative $264 million. So definitely just bleeding a lot of money, losing a lot of money here. Let's kind of look forward though, and let's see what analysts are saying for this stock moving forward, because we know in the short term it's pretty brutal. They're bleeding a lot of money, but let's kind of see what the analysts are expecting. So if we look here at earning estimates for 2024, it says year ago EPS, so that would be 2023, losing 70 cents a share. The average estimate, or the consensus for 2024, is 57 cents, so that would be a pretty significant improvement. They would move that loss down by 13 cents per share. Then if you look at 2025, they're expecting a much larger improvement on earnings, cutting off 37 cents. So that would be really huge, if this holds true. If these 11 analysts here, this consensus ends up being true, that is going to be a huge improvement. But, we will kind of see. This is what the analysts are expecting. But again, if you look back here at the chart, they widened their loss here year over year for this most recent quarter. So we'll kind of see if they really do, continue to improve efficiency. But at least, 11 analysts are predicting a massive improvement there. And, if they can swing from, 70 cents down to 20 cents in a, 2-year period, maybe 2026 they can swing to a break even, or even maybe head towards a positive. So let's kind of look here at the revenue estimates. So for 2024, the sales growth estimate is 33.7%. So that is a pretty good increase there. That would put the average estimate for revenue at $625 million. And then if you look at 2025, they are predicting 18 analysts. They are predicting here sales growth of 42.9%. So that's a pretty good jump year over year. And that would put revenue at $894.08 million. So, with all these analysts that are taking a look here, they're definitely expecting big improvements here for Chargepoint in their earnings. But, definitely a few more years, I think, of losses. I think they're going to bleed money for a few more years. I mean, even if this holds true, right, it could be 2026, 2027 before they actually swing to a profit. So we'll kind of see here if these analysts know what they're talking about and these numbers actually ring true and they can actually get to a 20-cent loss for 2025. But I'll continue to keep you updated here on ticker CHPT or Chargepoint Holdings. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.